Hello, hello, hello. We'll get started here in a short minute or two here. Once everyone gets on to the brewery webinar, brewery trends webinar. So we'll give it one more minute here and we will get started. All right, we're going to go ahead and get started here. This is Lance CPA Group's Strategic Financial Trends for Breweries webinar here today, November 15th at 1 p.m. My name is Josh Lance. I am the Managing Director of Lance CPA Group. We are a CPA firm that specializes in working with craft breweries and providing outsourced accounting, tax, and consultant services. And the kind of purpose here for doing this webinar is really kind of near and dear to my heart to talk about kind of strategic trends and looking at it, businesses more strategically as particularly industries like the brewing industry or other companies who are in kind of growth phases get going and start up, that having the need to have good strategy in place and understand where your brewery is going and what are the internal and external forces that are impacting your brewery is important to that. So we're excited for you here to join us today. I'm going to hide my beautiful face here and go so you can see the full presentation, and we'll start going through here. At Landscaping Group, we don't feel like we're doing our job unless yours is getting easier. And kind of the point here of doing this presentation is to provide you some knowledge, some things to think about as you are running your breweries and trying to grow and scale them. We want to be able to provide you things and provide the services and information you need to make your job ultimately easier. And we understand your business sphere. We work with a number of breweries across the country and providing accounting, tax, consulting services. And you hire us, you have us come in to work with your brewery. So we're handling the numbers, the financials, that end of the business, so you can handle what you do best. And like I said, we have a focus on working with craft breweries. And so it's our business to get to know what you guys are doing and help you, as you grow and scale your brewery here. So kind of our agenda today is to talk through some of the current trends for breweries, what's going on in the industry, where's the industry going, and then what does it ultimately mean for you, the owner of a brewery. If you have any questions throughout this presentation, feel free to type them in the chat screen. Ask away. We'll do some questions throughout, and we'll also have time at the end to do questions. So feel free to ask those. And then, again, we'll have some time at the end to do questions. But ultimately, we want to be able to make this relevant and important to you. So the more questions, the better here. So we'll kick off here and talk through some of the current market trends in the brewing industry. So I'm sure most people, who are in breweries or follow the industry who are kind of aware of some of the kind of growth numbers that came out of the 2016 data that was compiled by the Brewers Association. So ultimately, if you look at growth, the industry is still growing, but the growth kind of slowed down comparatively to prior years. We'll kind of talk through kind of what caused that in particular, but I think it's kind of important to lay this kind of base level out here, so we understand kind of where the industry at large is at and where how that impacts your brewery or your brew pub and where you're going. I found it interesting here, again, this is by the Breweries Association, so mainly focused on craft, but that import beer actually had a pretty nice a growth rise in 2016 as well. So it's interesting to see how that trend with imports, which kind of got beat up initially when craft brewery had its kind of growth resurgence here in the past 10 years, how that is going to be impacted or impacting the craft industry. Also interesting to note is craft beer is being exported. U.S. craft beer is being exported, primarily to Europe and Asia, and seeing the growth there too. So there's some interesting things going on there. I remember seeing a couple months back an ad from a Japanese newspaper that was advertising Revolution's anti-hero IPA. So it's kind of cool to see how the U.S. craft beer market is impacting other markets globally. So I think that, we obviously we've seen this number, the 6.2% growth, 6% growth. If you look kind of comparatively what that looks like, in the kind of the past 5 years, it's kind of slowed down there. We had that nice, period from 2012 to 2015 where we had double-digit growth. Prior to that, we were back, 2011 had 12% growth, and then we're in the, the 6-7% range before that. So we kind of seen it kind of get back to kind of where it was. But I think it's important to know when looking at these numbers, how does that look, kind of from a segment by segment base, right? So, and the way the Brewers Association looks at breweries, they kind of break them into 4 groups. They have the contract brewers, which is obviously, breweries that are producing for other breweries. You have the regional micros, so the regional breweries, your New Belgiums, Sierra Nevadas, Dogfish Heads of the world. You have your microbreweries, and then you have your brew pubs. So if you look at those 4 groups for 2016, microbreweries and contract breweries and even brew pubs kind of kept their trend as far as growth. So while there was a little slippage, particularly in the microbrewery, it was about 33% for 2015. There was a little slippage. It was still pretty strong. The area where there was a lot of slippage is their kind of regional craft, regional micro, had a negative 5.66% decline from 2015. So while that 6% number, may have caused the rate, some people raise some eyebrows, in reality, when you kind of look at the trends on a kind of segment growth perspective, the microbreweries and the brew pubs and even the contract brewers, did quite well in 2016. But how does that impact everything there, or the whole craft brewing market? If we look at the regional crafts, that makes up 73% of the craft brewing market. So the growth that occurred with microbreweries that have 20.4%, the brew pubs and the contract brewing, couldn't fully offset the loss that was shown by the regional craft breweries, and thus we get to that 6% number. This is from Bart Watson, the chief economist of the Brewers Association. The era of 18% growth is probably over. Industry is a maturing industry. Having these growth rates in an industry of this size isn't possible going forward. And we're going to talk through that, kind of the growth trends and maturing market trends and how that impacts kind of the future growth and stability of the craft beer market. But what are these trends show us just from looking at that? Like Bart said, there is that maturation of the market. We've now moved from the growth phase to the maturity phase, and we'll talk through kind of, you look at like the industry life cycle kind of curves there. You initially have the kind of startup phase, you have the growth phase, the maturity phase, and the decline phase. And we're moving to the growth to maturity. So I think that's kind of important to know how that impacts you as an individual brewery owner. And what does the maturity phase of the market look like, and how you plan for your future, versus the growth phase. And I think that's going to have some, particular consequences to some breweries. And you're starting, and that's really kind of evident too in what's happening with the regionals. They're feeling that brunt earlier than the micros and the brew pubs and the contract brewers are. So if you kind of want to see where things are going, watch how the regionals look and react from a macro perspective, because that may shed some light on where things are moving. Ultimately, there's going to be some potential for segment saturation. So right now, the regionals are potentially saturated, and how we kind of know that, understand that is if you look at their capacity levels for the regional breweries, they're operating really kind of like a 65% capacity, whereas your micros are hitting basically that 100% capacity. Or some are at their thresholds, and you see that growth in the contract side, and that as a kind of a byproduct of the capacity levels at the micro level. So what is when we see a mature market, we're seeing the regionals being saturated. The next kind of impact would be contract, particularly as regionals move to start doing more contract work. Those contract numbers that were provided by the Brewer Association, we're looking at breweries that were just purely contract. They really weren't producing their own beer or their beer enough to be considered a regional or a micro. So that they're in the place now where the contract brewers may be impacted by the regionals trying to shift into their sphere, and you're seeing some of that already, and see how that works here going forward. And also looking kind of at what the new disruptive forces are to the market. So, just because we're kind of entering that maturity phase doesn't mean there's innovation and disruption that will stop happening. That stuff's still going to happen. So if you kind of look at outside the beer market, what do you see from kind of premium malt beverages and the growth that they've had in the last couple of years, same with distilleries. And as distilleries become, more readily in the market, and laws are loosened for distilleries, that how does that have an impact on breweries, both on a positive and negative perspective? And there's a lot of reason to think that the rise of distilleries actually can help the craft beer market, because it is a similar force in a different type of the beverage industry that may be able to kind of help pull beer along, or help beer pull on distilleries. But also have to look at what's inside the inside the beer market. The beer styles, consumer action with beer. As beer styles go in and out of favor, how does that impact the market as a whole, particularly in the maturity market? In the growth market, that's somewhat expected because that innovation exists and is part of the growth market. But as things start to mature and beer styles go out of favor, is it easy enough for breweries to kind of jump between beer styles, or gain and lose market share because of that? And ultimately, how is capacity being handled? There's another beer economist who, in his kind of number crunching of the market and the brewery's capacity, basically kind of came to the conclusion that the excess capacity that the regionals have, if you took every single microbrewery, that would basically fill that capacity, meaning that there's so much capacity at that level that those regional breweries could basically brew all the beer that the microbreweries are doing, and not have to add any additional capacity to do that. So capacity we know the regionals are being impacted by this most right now. But how does that change going forward as capacity shifts? more likely in a potential downward direction. In the upward direction, the contract breweries have the ability to offset that for micros, but how does that impact if things go the other direction and the excess capacity isn't being utilized at the micro level? So going back to the industry life cycles, so basically you have, like I said, the startups, the growth to maturity. And then there's kind of a question then after that, where do you go next? And we'll talk through the future of the industry, what those potentials are, from a macro perspective, and then we'll distill it back down to the microbrewery perspective. But when we look at signs of mature market, what do we see? We see consolidation, which we're seeing right now, with not only AB InBev, buying up some regionals, but you're also seeing some regionals acquiring regionals. So New Belgium's purchased a Magnolia, things like that. You'll start to see more of those things happen. So you will get some of these regionals to start buying micro brands in order to kind of keep pace or keep market share as things fluctuate with their own brands, as well as other regionals are doing this. There's also kind of a shakeout or an M&A process that then occurs. And what do we mean by that? So a shakeout is basically when investors want to get out, or there's a changing of the guard as far as who owns, what breweries. And we're seeing that as well. So there has been some M&A activity where, ownership of breweries has changed hands, whether it's, from a local investor to another local investor, or from a local investor group to private equity. That's happening. You're also seeing that at the regional perspective with Lagunitas and some of the others that have been acquired by other larger brands. There is, you kind of have this kind of shakeout or fiat here, right? And the shakeout also has some other consequences here. There is if you are a brewery that is kind of struggling along, there are a number of those out there that are looking to be acquired and can't, which kind of further dampens prices for brewery acquisitions and the sales cost. And so it's interesting to see when with those ones that are trying to sell it and can't, what's going on there, and are there more of those out there that are just not uncovered yet? You also have, the private equity companies who had acquired or got into a bunch of breweries 2, 3, 4 years ago, starting to make their exit plans. So in the private equity world, they're not interested in hanging on to their investments on the long term. They're interested in building up a brand and building up a company and selling it off, in kind of a buy low, sell high, or start low, sell high fashion. And so you're starting to see some of these exit plans starting to either take place or being planned out, where these private equity firms are potentially looking to make their move to get out. And so again, that gets back to the consolidation side of things of you see more regionals get snapped up by the macros or by other international brands that are looking to enter the U.S. market. Finally, it's market share and cash flow considerations. In a maturing market, there is more of a push to obtain market share and kind of throw your elbows around and get more of the market and to the detriment of others around there, and also watching cash flow. In a mature market, you're not going to have that growth that's going to help kind of bring in the cash that's necessary to do some expansion projects or to do things that allow you to gain that market share. So managing cash flow tighter becomes a bigger issue. Because you can't have to weather the 6% growth periods, and you may not have the ability to benefit from large double-digit growth in the future. So ultimately, what is next? And we talked about it here with the future. In a curve, an industry life cycle curve, you basically can have kind of 3 options once you hit maturation. One, you kind of hit the prolonged maturation, or the plateauing effect. Basically, the market kind of is what it is. Or there's now this new growth that happens. usually tied alongside a prolonged maturation or a prolonged plateauing, where some breweries that are kind of struggling along at this point in time decide to throw in the towel or get out. Which then, the consolidation of a market ultimately always brings some new growth in the smaller entrants and the smaller players, because there's now more room to move and more market share to gain, or there's the decline. And that can be driven by a number of things. We'll talk through each of these things and how that impacts breweries as a whole, and then we'll get to how this impacts breweries individually. And I think, again, it's important to know this as we look kind of from a strategic perspective looking forward as to, what are the impacts of this, and what are the things we need to be looking for our own breweries in this type of market, right? So, again, this is just another kind of visual of this right now. If you kind of look at that curve, we're kind of at that point, that dotted line point where the growth is moving into plateauing. And the question then is, how long is that plateau? How long is that maturity piece? And then where do we go from that? Is that going to be extended for a period of time? Is that going to be a short time and we hit back to more growth, or are we going the other direction? So let's talk about what prolonged maturation means here. So ultimately, growth will stall out from macroeconomic perspective. The growth from, like I said, you're not going to get those 12, 18% growth. You're going to get the 6, the 4s, maybe even a non-growth year thrown in there. And so there's that kind of growth that stalls out from a macroeconomic perspective, but then there's going to be different pockets within the market that grow and contract. So as 2016 showed, you had the kind of contraction of the regionals and the growth of the micros and the contracts, and so that's going to fluctuate, potentially between those in different ways, up and down during this maturation period. So there's going to be some give and take between different segments, and it's important to watch, which ones are given and which ones are taken, because that ultimately can impact your brewery individually. Ultimately, there's going to be a higher barrier of entry that comes into play. So it becomes either more costly because the availability of debt or investors isn't what it once was. And we're seeing that on the debt side, at least. Some larger banks that were playing in the market, in the craft beer market, have decided to exit or at least slow down their lending there. And because of that, they kind of now are controlling that supply of funds, which can become costlier and harder to get into, right? So we have this higher barrier of entry, so you're going to see, less players come to the market. But even now, as we stand right now, there's, over 2,000 breweries in planning in the United States. Obviously not all those are going to become actual breweries, but, there is enough of those still out there that's really going to be kind of more of a laggard kind of trend here when we look at prolonged maturation. And ultimately, then you have this kind of stability of the new normal, right? So you as the individual brewery owner, how do you operate when growth is single digits or non-existent, and how does that impact your brewery? So it's important to then, to understand, if this is the new normal, then what things do we need to plan for, change, adjust, and how we operate the breweries or brew pubs in order to succeed here in the future. From a new growth perspective, after a period of stability, growth continues, right? So we hit that kind of plateau. That plateau is, maybe not a long plateau. And then there's a new growth trend that continues, right? So again, this could still be driven by shifts on the macro level between macro breweries, imports, and crafts. So there's still more market share to be attained from macro, although imports are trying to hold down their own and are not as impacted by craft as they once were. So, where do those shifts happen? And then you're still going to see some shakeouts of breweries that aren't performing well. Ones that, can't latch onto that growth. will kind of cease to succeed and fall away there. So there'll be some pruning that occurs naturally in the market because of this. Just like, if you have a bush and you prune away some of the branches, it helps it, grow bigger and grow better. And so, you'll see some of that as well, even in the new growth stage. And then finally, decline, right? So, kind of the notes of, okay, are we in the decline phase here? Is there's going to be, much more further consolidation. And then it's the watch for the microeconomic events that force the hand of the market. And ultimately test the resolution there, right? So, and if you think from a kind of macroeconomic perspective, if we hit another Great Recession, okay, what does that mean, right? The brewery market itself may be okay, but it's still going to be hit because your consumers don't have necessarily the same disposable income to pay for craft beer at that point in time, where they're going to shift their buying habits that may have an impact. So that becomes a test of resolution for microbreweries, and then that's really kind of the, where we would see more of the microbreweries that aren't performing the way they should now would definitely fall off the map there, and it would be kind of that period of time of these microbreweries kind of walking through this kind of time of decline and trying to get to the point where the market picks back up again. So that could be definitely a test of resolution there. So ultimately, what's the path we're going to take? If you talk to people within the industry, you're going to get a variety of different answers. So Jim Koch, the owner of Boston Beer, says, get some craft brewers together and they'll tell you if we continue down this path, we'll be witness in the beginning of the end of the American craft beer revolution. Or you talk to Sam Calagione, owner of Dogfish Head, and he says, hey, we still have to realize there's only about 12% of the overall market share that craft beer industry has, and still has more room to climb and grow. So you're going to get a variety of answers, thoughts, opinions here as to, okay, what trend line are we going to happen? I don't think it's important to pick one now or say, okay, well, I definitely think a new growth is going to happen, or I definitely think there's going to be prolonged maturation. It ultimately becomes, how do you plan for all of the scenarios, right? So, the saying goes, plan for the worst, hope for the best. Ultimately, if another Great Recession happened, how would this impact your brewery? And so I think as brewery owners, we have to be planning as to, okay, if, we do hit a decline, what does that mean for us? How do we operate in that? How can we succeed in that? There are a number of stories in other industries who've gone through similar ebbs and flows of, the ones that, did the best as far as planning and understanding the market in those times of decline, acting strategically in those times of decline, actually, prospered during that time period. So there is the ability there to, not be swept away with the macroeconomic, but being able to plan and grow and handle that and weather that storm in a way that allows you to succeed is definitely a possibility. And how we kind of do that, or how we kind of recommend doing that, is really utilizing forecasting as a tool to understand where your brewery's going and how that would look and under different scenarios. So it's not just we have a forecast and our forecast says X. It's we have a forecast in kind of the control environment of where we stand right now, if things continue the way they are. And then we have a scenario that we run that says, okay, well, if we hit that new growth, what does that look like for us? We have a scenario that we run that if we have a prolonged maturation, a prolonged period of time of kind of flat growth or that kind of stability area, what does that look like for us? And run a scenario that says, okay, if we do have a Great Recession, or there is something that hits the craft beer market particularly hard, what does that look like for us as well? And be able to use as a planning tool to say, in the worst case scenario, will we still be okay? Because if we answer that question yes, then we'll know we'll be okay in the other scenarios as well. And we just got to plan, that plan for all situations. And ultimately, there's the idea of future focus in your business lines. So if you are, a tap room that also does distributions, or you're primarily a distribution brewery looking to get into having a tap room or tasting room, or if you're a brew pub, understanding what are your different profit lines. So if my sales primarily come from taproom sales, but I also, 20% of my sales come from distribution, understand, okay, how are those looking from a profitability perspective? Is one of those lines paying for the other? Am I losing money in one line that then, is being offset by profits in another? Particularly for brew pubs, this is a key question, because it can be very easy for the brewery side of the brew pub to pay for the restaurant's losses, and even potentially vice versa. But usually it's the brew pub paying for the restaurant's losses. So understanding your business from a different business line perspective, I think, becomes important, because then if you're looking forward and you're trying to act strategically in what's coming down the line here. Understand, okay, how does a decline, or how does a prolonged maturation period or a plateauing period impact us from a taproom perspective, impact us from a self-distribution perspective, help impact us from a distribution or food or whatever kind of different business lines you have. Understanding, okay, how those lines will function in different circumstances is important. And sometimes it's, it's easy to kind of just lump everything in total, but we want to know, are there actions or things that we're doing as a brewery that are causing us to lose money, but we don't know that because our other profitable lines or our profitable profit centers are covering for that loss. So that's an important, thing as you're kind of looking forward is, how are our different lines being impacted by, future conditions. And ultimately understand the different external elements to make a profitability. So understand, the raw material markets, understand what's going on in in farming and agriculture surrounding barley and hops and things like that. If there was some sort of crop disease that wiped out 25% of the barley production, what would that mean for your brewery? How would that impact your profitability and cost and things like that? And it's one of those things that, being focused and understanding, okay, what are their markets or other elements that impact my brewery? How are they reacting? Do they have their own industry issues and trends that could impact my business, impact my profitability? Keeping a close eye on that. I know hops tends to be more closely focused because of the need to buy forward hop contracts and things like that. But the other elements that are just as important too, to make sure of that. And places like the Brewery Association and other industry trade groups are looking at that data. So I think it's important to also, as a brewery owner, look at it, not just rely on what you get from different sources, but understand, okay, what are they looking at? Because you want to be on top of any changes you see or potential issues you may see in the future. And ultimately, the question to be asked is your business fully operational? And I think there's a lot of brewers who say yes, but if you dig into their business, the answer is probably no. And what I mean by business being fully operational, I mean that if your goal is to sell 80% of your beer in your tap room and 20% of beer in a distribution capacity. Are you actually living into that? Are you pulling from one area or the other? When it comes to owners working in the business, are those owners actually getting paid? It's one thing to show a profitable brewery from an EBITDA perspective, but if the owners aren't getting paid, that certainly has an impact there too. So your brewery has to run and function on its own as a separate standalone entity. And so if it requires the owner to work 60 hours in the business each week and, pull a salary of $10,000, that's not going to cut it in the long term. It should be able to stand on its own and not be bolstered by things that, are not long-term solutions. So understanding that is an important part of this. So, asking the question, is our business fully operational the way we intended? Are we living into the different profit centers that we're supposed to be living into, or planning on living to, or are we paying owners, reasonable market wages? Are we, if you have investors or something that are kind of feeding the brewery a bit, when it has cash crunches, that's not being fully operational. It needs to be able to stand on its own. And if there's future cash needs, to be able to do that in a way that makes sense, and not being the pattern of being bailed out by investors or other groups. So going back, obviously we talked about utilizing forecasting. When we see a lot of forecasts from different breweries that either other industry groups have made or other people who kind of specialize in doing some stuff make, and particularly we also work on another business line of our company is tech startups, and we see this a lot too. There is you'll get these really complex forecasting models with it'll be an Excel spreadsheet with 10 tabs and 2 macros and all these complex things in there. And ultimately, the forecast needs to be useful for the brewery owner itself. We found that when those forecasts are super complex, once it gets handed off to the owner of the company, they kind of look at it and they don't really know what to do with it going forward. And a forecast should not be a static document. It's not something you prepare once and that's it, and just kind of watch it and look at it and see how pretty it is. It's something that needs to be constantly updated and tended to and adjusted and updated for different things that are happening from a macro micro perspective. So we really try to focus on when we do forecasting and make forecasting really simple. And so what does that mean? Like I said, avoid complicated Excel spreadsheets. Again, it makes it really hard to follow. Added complexity does not provide added value. So the more complex something is, the more valuable that something is. So making sure that forecast is something that is actually usable to the end user. And the more complicated it is, the less likely to use. I mean, we see that all the time where, someone will spend 10 grand on a really nice looking 12-page or Excel, financial forecast, and then they don't know how to use it or utilize it later. And then, it really kind of loses its value if you're not constantly using it and updating it and making it a living, breathing document versus a static document. The other thing when making forecasting simple is making sure you have clear documented assumptions. Some of these, when you create a forecast or what if scenario that says, all right, I expect 10% growth, the question that needs to be answered is why. It shouldn't be 10% growth just because, or it shouldn't be, whatever assumptions you're building into your forecast should be something that, is grounded or anchored in actual data, or whether that's historical, whether that's industry data, whether that's things we're seeing. Now, obviously, if you're a brand new brewery or a brewery in planning, that's not, you don't have the historical data to work off of, but you do have industry data to work off of. You do have other data that you can obtain from industry groups or even other breweries that can help you along with that. So make sure that those, any assumptions that you build into this, because the forecast is going to be filled with assumptions, that those are clear and those are documented. And also make sure if you have things that are variable costs, the time to what causes them to vary. So an example of this would be payroll taxes. Your payroll taxes are going to be 7.65% of your salaries and wages, right? So it makes sense if you're going to have your salaries and wages grow by 5% or 10% because you're going to hire someone, that your variable cost also follow suit as well. If they don't, then it begs some questions on the forecast. Ultimately, don't overextend your forecast. I've seen forecasts that go 10 years in length. We really feel that about 3 years is kind of the max on that. Once you get kind of beyond that, you're kind of too far off in the distance to make forecasts that actually have some meaningful data to you. So make sure that your forecast isn't overextended. So we like to see 3-year forecast, less if you can. If you wanted to, I wouldn't go more than 5, but really 3 is kind of the magic number there. Because again, you're going to be constantly updating this forecast, and once a month of actual data falls off, you're going to add a new month of forecasted data at the end. So it's always going to be kind of a 3-month lookout or 12-month lookout. And with this quote from Warren Buffett, it's better to be approximately right than precisely wrong. You don't have to get into like exact dollars and cents of certain things in your forecast. We want to be approximately right. Getting it perfect is not going to happen. It needs to be good enough. And trying to build in or try to get that forecast to get a precise answer out of it is not the point of that. Ultimately, make it usable and user-friendly. As if you're going to be, it's going to be a living, breathing document. It needs to be usable to you. It needs to be usable to the users that are going to need it, whether it's investors or bankers or other folks that are needing that data and information. It needs to be beneficial and usable to them. And make sure your forecast includes both EBITDA or net operating income, and EBITDA is basically earnings before interest, taxes, depreciation, and amortization. That's what that acronym stands for. And also have cash flow items in there, whether it's loan repayments, fixed asset purchases, etc. It's important to both forecast the operating income, but also the cash activity. And the reason for that is, from a forecast perspective, the moment you run out of cash is the moment that the forecast is no longer, it's useful to know when that time is you're forecasting, but you need to know what that is. And so I've seen too many forecasts that, have a nice 3-year runway, but in, month 16, they ran out of cash. And because they didn't put those cash flow items in there, they didn't notice that or realize that. And so it's important to have those cash flow items as part of your forecast, and make sure you're rolling future cash flow balances in there, because it should also work as a cash flow forecasting tool. Not just a budgetary forecasting or a sales or operations forecasting. It should also look at cash flow as well. And make sure ultimately to update this. Again, it's a living, breathing document. So typically what we do when we do forecasting is, when a current month is complete, we'll do kind of a forecast actual analysis to see, okay, how close were we to what we're forecasting or off? See areas where there's significant differences to help understand, is there new data at play that we need to build into the forecast? Update that forecast and add a new month at the end of that forecast, so we still have the same period of time of forecasting in the future. And then, use what-if analysis to look at different scenarios, which again is really important if you're looking at the prolonged maturation or the new growth or the decline phase. It's important to know what those scenarios are and what those adjustments are. So, if the decline phase is not showing something that looks pretty there, that what you need to change now, in case you ever run into that, in case that's the scenario that proves the most plausible. Again, I make this simple. Use one-page Excel. You don't have to have a ton of tabs or micros or macros or crazy formulas in there. Keep it simple and straightforward. Or use a forecasting software. There's one out there we use called Futurely, which kind of helps automate the actuals. So you can get that forecast, the actual, down pretty easy and add in additional time, and it makes it simple. And you can also do some KPI analysis on that as well. And then ultimately we get to what's kind of our tracking our metrics that we're looking at. So what are the key metrics that you should be looking at? And this will be different for brewery to brewery, but one thing one of the big ones is looking at gross profit margin per business line. So what's your gross profit margin for your tap room? Selling beer in a tap room versus, what's your gross profit margin for selling beer in a distribution model? Understanding what that is in a trend perspective. So the 1 month data isn't good in a month itself. It needs to be looked at in a trend of time. But that's a good one to look at, and it's kind of an easy one to look at too, particularly since breweries are already pretty detailed oriented when it comes to inventory and costing. because you already have that detail, the gross profit margin analysis becomes a pretty simple metric to capture and review. Also look at capacity. So how does your capacity look, and how does that fluctuate and change? Particularly as you're looking at growth. This is also important forecasting. If you're doing some growth trend analysis, you don't want to show you're going to grow sales by 10%, but in month you've actually ran out of capacity and can no longer do that. So you want to know what that kind of metric is, what that capacity is, how much more you can realistically get out of your brewery, and when's the right time to then start adding additional equipment or make different changes in the business. Profit per barrel is another good one to track. And another one too to track is kind of labor efficiency. Ultimately knowing that humans are not robots and they're not going to be 100% efficient. So you want to know how efficient they are, particularly with your brewery staff, as far as their work goes. And like I said, what's key for one brewery may not be key for another. You have to figure out what metrics make the most sense for you, and what helps you make the best decisions. So for some people, looking at gross profit margin is super beneficial. For others, it may be something else. Understand what those metrics are that are key for you, and track those and understand those, because that's going to help you as you look kind of strategically at your business. Helps you kind of figure, okay, if I have a 3-year growth plan of X, I need to have these certain metrics in place or these measurables in place to allow me to get there. Also, avoid getting complex on cost accounting. There are a lot of different costing ways to go about doing cost accounting. Ultimately, costing is a metric, not a measurement. So there is importance to understand the cost on a particular beer batch from a kind of a gross profit percentage. But once you start throwing things outside of the raw materials world, you start to add in some different metric into your calculation and not true measurements. So if you have software that's calculating this out, like an Ecos, that's great. But I wouldn't spend a whole lot of time getting into cost accounting, because you can start developing answers or make the numbers look the way you want them to look, and not the way they actually is in the world. So, and then ultimately, how does your brewery stack up against the market? So how do you look against other breweries, either in your market or other breweries doing similar things as you or similar size as you? And we'll talk a little bit more about this at the end here of the webinar. But understanding how you kind of stack up, because that kind of helps to understand, if there's a particular metric or something that you're doing, maybe you have way too much inventory on hand. You bought too much raw materials up front. You weren't running that lean, and comparatively to the market, your inventory levels are a lot higher than other breweries in similar sizes and similar positions as you. That could, basically say, hey, we got too much cash tied up on things that aren't actually earning us money at this point. So it's a good way to kind of, stack and measure up against other breweries to see, okay, are there things we're doing that don't make sense, or we're not, running our brewery as effectively or efficiently as possible. We got our final topic here is being strategic. And this is kind of a passion for us here in our firm, is we ultimately want to understand what's going on in the business and make future decisions to go from now to where we want to be. And in order to do that, there's got to be some strategy at play and some things we do, and running the brewery that allows us to get there. And so, looking at it from a high level is, okay, what's our kind of 1 year, 3 year, 5 year, 10 year, what are those kind of mileposts in the future, and the goals and markers that we want to get to, that makes sense for us, and then how do we get from here to those mile markers? And part of that gets back to understanding our metrics and being able to track and measure things, because that's going to tell us, are we going to get to where we need to be in 1 year or 3 years or 5 years or 10 years? And we need to understand, how do we know when we get there, right? If your 1 year goal is to have $10 million in revenue, that may be an easy way, that's an easy number to kind of understand, because you look in a year from now and say, okay, we get $10 million in revenue. But underneath that, there are a lot of things that got you to that revenue piece. And so understanding those measurements of how many barrels do we need to sell each month, what's our output going to be? Do we have the capacity to even get to our goals? Are our goals realistic? Understanding those measurements that are kind of those things underneath there that allow you to understand if you're going to get to that ultimate, profit goal or revenue goal that you want to get to, and figuring out what needs to change to get there. As you look at doing this, or you're kind of looking at the strategicness of, maybe what your 3-year goal is, and you look and say, okay, based on where we're at now, I don't see a path there. Start looking, okay, what do I need to change in our organization that allows me to get that path there? If I believe that goal is a realistic goal, what do I need to do or change to do that? So if we go back here to, those kind of 3 things from a macro perspective we talked about: the maturity, prolonged maturity or plateau stage, the new growth stage, or decline or death stage. Those same 3 potentials are in place for you as an individual brewery as well. And some of that may be driven by macroeconomic conditions, and some of it's not going to be. Some of it's going to be driven by how you run and operate your brewery. So ultimately, where do you want to go? I mean, most people I don't think want to run the brewery into the ground. I think they want to be able to either grow the brewery or keep it something that allows them to lead the lifestyle that they want to lead. But they don't want to get to that death or decline phase. But if you don't understand what that looks like or understand how to measure that, then you're not sure of where you're going to fall under those 3 areas. So how do you go about doing this? So one is build the right structure in place. So what is the right internal structure for your brewery? And by structure, I mean the processes and people, and what you're doing, and your vision, and all the components that make up the internal structure of your brewery. You think about like a house, right? It's going to be the foundation and the walls, and putting the right joist in place, and things like that allow you to build that structure that allows you to grow, if growth is where you want to be, or builds the right structure that allows you to have that kind of company that allows you to live the lifestyle that you want to live. Making sure you have the right people in place. So the people you have in place right now, your brewery, may not be the people you have in place in the future that gets you to your goals. And so understanding who those right people are. Understanding, maybe you have someone who's the right person, but they're in the wrong spot in your brewery, and making the adjustments and changes that allows them to shift from the role that they shouldn't be in to the role that they should be in. And that's quite common, that you have people in your brewery that are doing things that, while are good on their own, that maybe that's not the right seat for them in the company. And you may also find that you have the wrong people in place, and you need to let go of some people, or move them someplace else that allows you to get the growth you want, or the business the way you want it to be. Understanding those measurables, so making sure that forecast in place, and that you're tracking those metrics that are important to your brewery on a regular basis. And if those measurables aren't, are veering off course to get you where you want to be, making those appropriate changes to get you there. And ultimately communicating that vision throughout your organization. So it's not just something you put up in your head and just run with it. It's something that is distilled throughout the organization, that everyone's on the same page as to where this brewery is going, all the way from the bartender to the person manning the cannon line, to the people you have that are outside your organization, your accountants, your lawyers, your branding and marketing teams. Everyone needs to be on the same page on where the organization is going. And those that cannot commit to that vision that you're distilling out are people you need to move out and get the right people in. And ultimately, this is kind of being more the visionary and not the follower. it can be easy, particularly in the craft brewery industry, but any industry that has been in the growth phase, to follow along with what the other industry is doing, not taking a lead as far as where you want to go. But when you're in a maturing market or declining market, you kind of have to now be that visionary or kind of chart your own path as to where you think you should be going. It's not enough just to, be a brewery and, kind of the whole rising tide lifts all boats. When the tide starts to go away, are you going to be beach, the shore, or are you still going to be out in the ocean? So taking those changes and doing things that may be a little different or uncustomary in the brewing industry or in your location, that allows you to kind of chart your own path. So that's kind of the big pieces here that we want to talk about. We did want to talk about one event that we have here coming up on January 23rd in 2018. We are doing a brewery benchmarking event. So getting back to those metrics, what we are going to do is for breweries that are interested and are willing to provide us their data, we're going to kind of scrub that data and make it anonymous, so no one knows whose data is who, but we're going to do a kind of basically brewery benchmarking analysis of the breweries that are participating, and go over some key metrics and areas and do some comparison. So participants that get this are going to see the benchmark analysis in total, but also see how their brewery stacks up against their peers. And then we're going to talk through what those, what does it all mean, right? So we have all this data, we compile. What does this all mean? And how do we then take that data to be more strategic in our business? So we're hoping by doing this event that we can get that data into breweries' hands so that they understand, kind of where they sit from kind of a baseline perspective, and then take that information and knowledge and apply that to the brewery to get them to where they want to go. So we're really excited about this event. So if you are interested in this, you can email us you can email myself, josh@lancecpa.com, or you can email our general inbox, info@lancecpa.com. Let us know you're interested. This is open to any and all breweries that want to participate. We just ask that if you're participating, that you're willing to share some data with us. And if you're a brewery in planning or a new brewery or you don't have that data to work with, we still invite you to come because we think this is going to be interesting data and information for you as well. And we hope to kind of do this on a periodic basis where we continually refresh and update this data. So you kind of see how things are trending along there. So, so yeah, we're really excited about that. January 23rd, 2018. Again, you can email us at josh@lancecpa.com or info@lancecpa.com. We'll also have a website up for that here in the near future that you can get more data and information on and sign up there as well. And with that, I will open it up to any questions that people have. Feel free to chat them in the message box, or chat us in the message box, and we will answer that. We'll leave it open here for a minute. Also, this webinar was recorded and will be on our YouTube channel here in short order. So if you missed it, or if you know of another brewery owner that you think this would be good information to get to them, you can share that from our YouTube page. We'll also put it up on our website as well, so that's there for you. And with that, it doesn't look like we have any questions at this time. So again, thank you for joining us here today. Again, reach out to us if you have any questions or want to run some ideas by us, or in need of any accounting help for your brewery. Let us know. Again,